Did you know that what most people believe about a VA loan is actually wrong? I'm Jason Wood, the VA Loan Guide, and with over 20 years of specializing in financing for veterans, I'm here to tell you about the 5 biggest VA loan myths and bust them for you. Many will tell you VA loans take significantly longer than any other mortgage type to close. This is completely wrong. In fact, we close VA loans as fast, if not faster, than any other mortgage transaction. What you'll find is your lender really determines how fast or not they are with closing a VA loan. Usually the bigger the bank, the bigger the name, the slower they are. Our average turn time for closing a VA loan right now is around 20 days, but we can do many of them in 10 to 12 days. The biggest factors affecting closing timeline aren't really specific to a particular type of mortgage. They are specific to how quickly you can provide documentation to the lender's current workload and efficiency, the complexity of your particular situation, and how quickly the appraisal can be completed. The key to closing fast is working with somebody who specializes in the loan product that you're seeking and knows how to move through the process effectively and efficiently, provided you're supplying everything that you need quickly as well. Myth number 2, you need perfect credit to get a VA loan. This myth is false. In fact, the VA doesn't even have a minimum credit score requirement. Now, some lenders have what are called overlays, where they will add a minimum credit score to their requirements for the VA loan, but the VA does not have a minimum credit score requirement. We can go down to a credit score as low as 500. Keep in mind, the higher a credit score, the better your financing terms are going to be. So work on your credit, try and get it as high as you can. As we covered in our credit score video, you'll know that the VA loan is super flexible when it comes to credit scores. Credit scores range anywhere from like 350 points to 850 points on the top end. With VA being able to go as low as a 500 credit score, most of your conventional lenders out there are going to require you have at least a 620, maybe a 640 credit score, even to qualify for a conventional loan. So there's a huge opportunity for someone who doesn't have perfect credit, but has access to the VA loan. This is your opportunity. The other thing about VA loans is they are more friendly to credit score because they look at other significant factors of the loan file, not just credit score to determine if you're in or not. So they will use compensating factors and situational circumstances to determine if you're going to be eligible for the loan, even if the credit is less than perfect. Things they're going to be looking at is stable income, low debt to income ratios, any reserves, and the VA residual income. If that exceeds the minimum required by the VA, that's another really good feather in your cap to help get your VA loan approved. Now let's address the myth VA loans can only be used for a primary residence. This is sort of true. Now, when you're buying a home using your VA loan, the intention has to be for it to be your primary residence. However, you can buy a multifamily home where you occupy, because you still have to buy it as a primary residence, but you occupy one unit and the other unit or units up to 4 can be rented out to tenants. So you could buy a 4-unit multifamily home, live in one unit, and have 3 tenants renting from you. So it's a combination of a primary residence and a rental property all in one. Now, to exacerbate that even further, let's say you just bought a regular house. You bought it with a VA loan, and now it's time to move. You got orders, or you're just moving across town or whatever. You don't need to change the loan on that property. You can rent it out. You can stick a renter in there and leave the VA loan on it. Now that home is a rental property. So when you acquired it, it had to be for your primary residence, but you can subsequently move out of that house and turn it into an investment property. Another persistent myth is you can only use your VA loan once. You can use your VA loan multiple times, simultaneously in some cases. I have many clients who have 2 active VA loans going. I have a few that have 3 active VA loans going at one time. So it's absolutely possible, and you can use your VA loan over and over again. There are 2 primary ways to use your VA home loan benefit. One of them is restoration of entitlement. If you refinance the loan out of the VA loan or you sell the property, that will replenish or restore all of the entitlement that was allocated on that loan. The other way to reuse your VA benefit is with remaining entitlement. This is when you already have a house with a VA loan on it, you're moving to a new place and you want to use your VA loan again. We will do the entitlement calculations for you to show you how much VA will lend you with 0 down payment on the next house. This is how you can see where people have 2 VA loans active at one time, and in some instances, even up to 3 that I've seen active at one time. So I'll explain to you a little bit more on how that works. What VA entitlement is. VA entitlement is basically the phrase for the VA guarantee to the banks. So when the VA loan came to being, the predication was that it was going to provide a guarantee to all the lenders. It was going to provide a 25% guarantee to the lenders. If you ever default on that loan, then the bank just has to call the VA and boom, they guarantee it. Here's a check for 25% of the original loan amount. So your entitlement amount is basically the guarantee that's been allocated on your behalf in case you were to default. So when you take out a VA loan, there's a 25% calculation of that original loan amount, and that's the entitlement amount that's allocated to you for property A. When it's time to go buy property B, we analyze and look at what entitlement is outstanding still, and then we look at the county which you're moving to, and we're going to take a 25% calculation of that county loan limit to determine the VA's guarantee in that county. Then we subtract your existing entitlement that's allocated on property A, and that gives us net entitlement that's available for property B. And that is a 25% calculation. So that times 4 is what gives you your new zero down on the VA loan. You can go above that. And if you do go above it, the VA says, no problem. You just need to self-guarantee. So for every $1 you go over that number, you got to bring in 25 cents as a down payment. Pretty simple. I've worked with veterans who are on their 3rd, 4th, 5th, maybe even 6th or 7th VA loan because they've paid it off, sold a property, refinanced, and they've continued to do this. And one of the great ways to build wealth, especially when you're active duty, is to buy a property every time you PCS. Now you have the opportunity to refinance one into a conventional loan, use that VA loan at the next duty station, and you can kind of keep doing that leapfrog move. And sometimes you might have 2 properties on VA loans, and that's totally okay. The next myth that can be particularly damaging is sellers won't accept VA loan offers. This myth that the sellers are reluctant to accept VA loan offers is false. However, the uneducated real estate agent that's selling the house may have some objections or some fears about the VA loan. So that's when it becomes super critical that your real estate team, your realtor and your lender are well-versed in VA and have helped many military or veteran families with the VA loan so they can help overcome any objections or fears that that other listing agent may have. And this myth really stems from probably 2+ decades ago when VA loans were a lot more sticky and a lot more challenging to get through. But over the course of time, the VA loan has evolved to the point where we can close them as quickly, as smoothly, even smoother than some of the other loan products that are out there. So really, there is no reason not to be accepting a VA offer if you're a seller. Sometimes it's just a lack of education. So we've just busted the 5 biggest VA loan myths that are out on the marketplace. As a lender specializing in VA loans for over 20 years, I can tell you that most of these myths are created by just a lack of knowledge, a lack of education. If you found this video useful, please give us a like and a subscribe and share this with another veteran who might love this information as well.